Good morning. Good morning, everyone. I hope all of you can hear me. My name is Gloria Okello from Finnet Institute, and I'll be your moderator for the session today. And I'd love to welcome each and everyone for this session. So before we start, we can give the participants who are joining like 3 more minutes, then we can start at exactly at 10 or 5. Thank you. In case of anything, you can use the chat box as well. Kindly let us mute as we join. Thank you, Victor, for that. I'm sorry. What about now? I hope I'm clear. Hope I'm audible enough. Jane, can you hear me? Thank you, Juliet and Jane, for confirming. Good morning once again for those who've joined us. Before we start the agenda of the day, I'll welcome my colleague Samuel to start with a word of prayer. Then we can kick into the agenda of the day. Karibu, Sam.
Good morning, all. Let us believe and pray. We thank you, our Heavenly Father, for your love and care. Thank you for this, Father, to brought us. Thank you for the peace within and the peace without. And also thank you for keeping all Kenyans well. We pray as we want to start our program that you be with us, that you guide us, give us wisdom and knowledge, and lead us through it. And may it all be successful. All glory and honor we give back unto thee. We pray, believing, trusting in the mighty name of Lord Jesus Christ, our Savior. Amen.
Thank you so much, Samuel, for that. So as I'd introduced myself, my name is Gloria Okello. I'll be your moderator for today. And I'll be assisted by my colleague Samuel Nondo, who will be assisting me to moderate the session. So before, as we've already started with the word of prayer, I want to welcome each and every one of us who've joined from wherever you are joining us from. Karibu, and we hope as we start our session on Beyond Strategic Plan webinar, that is through driving execution, sorry, and accountability in pension schemes. So I'll welcome my co-moderator Samuel to take us through, to introduce Finet, then we can kick into the agenda of the day. Karibu.
Thank you, Gloria. Um, it's a pleasure to do the moderation work with you. And thank you, all our members. We're going to share screen um, of our profile so that at least we get to acquaint ourselves with the program. Well, we are going to share it in a few. There's a little bit of technical hitch, but just to say that Finet Trust is a financial independent network company that offers governance consulting, training services, and also the risk and solutions. That is through the insurance services that we offer at Finet Insurance Agency. We're three company in one. That has been Finet Trust, which is specializing in governance consulting, and also Finet training services that's handling the local training as well as also the global training that we've been engaged different stakeholders and investors both locally and globally. Um, we also, in terms of the company, as mentioned, the product line, we have consulting, training, technology section part of it, and the employee benefit, that's the insurance. In relation to technology, we realize that the world is changing and the way of conducting business also is changing, and it's quite ideal to ensure that we also keep up with the game of the industry. We have quite good programs that have been brought on board through Finet, that is Finndemy and also Prism, which are meant to offer training services through Finndemy to all Kenyans or schemes, trustees, employees to log in, prescribes, and also learn from the platform. Through Prisms, basically this is for schemes that we're using for risk management, data protections, and also to deliver optimized services. From there, we have a proven track record of excellence. We pride ourselves that we've at least managed to train professionals, over 5,000 plus, who have been empowered through our training programs, and we really appreciate for the support. At the same time, we also managed to ensure that at least over 300 plus professionals, trainers, and consultants that we've mobilized across the world. In the same space, we have over 1,000 plus the public sector board members development and governance expertise that we've engaged in our governance consulting programs that we've ensured at least some level of business is being done at a different playground compared to the global practice. Um, in terms of pension trustees, we've also managed to engage over 3,000 fiduciaries, stakeholders that have managed to learn from our expert team on how to manage the services and also the pension funds for different schemes. On the same wavelength, we've also managed to pay a visit through benchmarking and learning programs globally over 30 countries since the formulation of FINET. This is a space of 4 years. We are celebrating 4 years that we've managed to do 30 benchmarkings and learning program globally, which is not a quite easy task given from other competitors or our peers in the market. On the same space, we've managed to engage corporate rather schemes that are managing over 100 billion. So that speaks of our kind of expertise in the line of business that we are managing. We are quite grateful for the support from all our members and also prospective members that are yet to join us. In terms of our vision, as Finet, we combine the passions and skills to ensure that we deliver the best to our clientels in the financial industry. And our main element is through cooperation and collaboration to bring sustainable thinking. Our vision would be provide the best advice and future thinking, also to create a future thinking world of financial services. Basically, to deliver the best to the stakeholders, we have to ensure that our vision speaks of the future as well as also we practice in the present. And our purpose basically is to combine the human talent and technology. Like I said before, we've already taken a space in the technology element by providing solutions. So we need to combine the two to ensure that our goal is achieved. Our core values we talk about of innovation, respect, collaboration, and integrity that cuts across all our services and our subsidiary sectors. Our mantra would be, and I really love it because we build a better tomorrow today. We want to create a world whereby after us, at least the generation that is coming will have that better world. Our clientele basically is structured in NGOs, SMEs. We also have public and private sectors, the insurance providers, and the pension funds, as well as the general public through our Finndemy program that are open to join and work with us on an individual basis or even through group programs. And when you come to our clientels in terms of reality, the ones that we've engaged so far, we've engaged a number more than this, but just to mention a few, uh, building from the corporate, the private, and the public sectors. Then we have a Finndemy. I just mentioned a few back. So what is Finndemy? Basically, it's a platform that has been developed to provide online learning to um, provide scalable or techniques or skills to different individuals or professionals within different line or schemes of business. Our main intention with this is to make learning at home, or rather bring it closer. Sometimes there might be challenges of traveling here and there, the cost implication that might make the physical training quite a little bit difficult or challenging, if that's the best word there. But now we've provided solutions. We've listened to you and we've provided solutions through an online training platform that is Finndemy. And we have a program through Finndemy that providing solutions in terms of real-time analytics and compliance-ready reports that's available. It can also save at least 70 to 90 costs through bulk licensing, where we train a group. This can work well for different schemes or different organizations. These are 24/7 our mobile or desktop space for learning. You can log in and get knowledge through the comfort of your couch or your bed whenever you're free. Um, we have incorporated 62 plus experts that led courses that have been developed and uploaded in the platform. And our compliance, actually, it's ready and the dashboard aligned with the RBA, as well as the NSSF and the regional pension regulations. So there's element of compliance that has been taken. There's element of the market, because we ensure that the goals of different schemes or different organizations are well met by incorporating the experience and also the case studies that we bring on board across the region of East Africa. So it is a great platform that combines a wholesome from governance, markets, and also case study elements. We have webinars that are upcoming regarding Finndemy, and we applaud, rather request all our stakeholders to join and listen in and help support us. You can also share the word with the different colleagues and also even friends to come and learn for free through our webinars that we are providing. And that is it about Finet as a company. And we are looking forward to interact with you then through the session, taking your questions. Please listen in, tune in, and stay hooked. Thank you. So let me give this back to Gloria for further direction. Thank you.
Uh, Thank you so much, Samuel Londo, for that. I'll just read out some housekeeping rules so that we are able to just all be in sync and in collaboration. So if you have any questions, please make use of the chat box, or if it's a burning question, you can kindly raise your hand, then we'll be able to assist there. I encourage all of us to participate, ask questions, so that we may have an interactive session. As we all know, the importance of SP, and we learn the importance of the strategic plan and how to execute it. So with no further ado, I'll welcome our first speaker for the day, CS Godwin Simba. Thank you and karibu.
Uh, Gloria, could you confirm that my screen is visible?
Yes, it's visible.
All right, thank you. Good morning, everyone, from wherever you are listening in from. I want to welcome you all to this engagement this morning around governance and strategy relating to the pension funds. It's my pleasure to join you this morning. As mentioned, my name is C.S. Godwin Simba. I'm the team lead at Finnet Trust Services, and by extension, the host of this forum, which is Finnet Institute. Just from a high level, a governance consulting and investment advisory expert, having engaged with quite a number of pension funds in Kenya, Uganda, and Zambia in terms of administration, fund management. And through our global exchange programs, we've been able to also engage more than 30 global pension funds that have shared insights within what they do in terms of their frameworks, and also in terms of the adaptation, in terms of their performance of their day-to-day engagements. I'm also a governance auditor by profession and a certified trustee, and I sit in the council for the Association of Pension Trustees and Administrators of Kenya. And it's my pleasure to join all of you this morning, and also to share my insights on a few areas that I think may shape the future of the pension funds, be it not only in Kenya but also globally. So as we talk about the topic of today, which is relatively more about how do we strengthen our governance framework through strategy, and also ensuring that we have high execution within our strategy frameworks. It takes us back to the basics of why pension funds exist and the role of the parties within the pension funds. And in our view, governance and strategy go hand in hand, because you can't be able to build a robust institution without governance. So governance is the foundation of any high successful institution. But on the flip side, an institution without direction may not likely succeed, because then strategy comes in to provide a direction and also a unifying factor within the stakeholders of any organization. So when you look at strategy from a formulation perspective, then it's a unifying factor and also helps to direct resources to areas that require priorities, and also look at issues that the organization can focus on. But you can't talk about strategy in conclusiveness if you can't be able to link it to execution, because then a strategy without execution, then it becomes just a mere document. So today we are just trying to align ourselves on building up the foundation on governance, but then also bringing in strategy as a critical framework that will help achieve or help to drive success of any organization. So today, I'll begin by just giving us a snapshot in terms of the Kenyan pension sector overview. We'll talk about what are the emerging issues and also risks that we are seeing within the context of the pension funds, and what are the industry best practices that we can share. And then later on, my colleague will come in to talk about the art of execution with regards to the strategy. And we believe that that will be a building block in the conversations that we'll have today. On a snapshot, from the Kenyan context perspective, you're talking about 2.81 trillion assets under management as of December 2025. And that represents around 18 million US dollars, 18 billion US dollars in terms of assets under management, more than 4.5 million contributors. And seemingly, and on a comparative scale, we find that the coverage between the workforce who are, the coverage of the workforce who are employed vis-a-vis those who are in the formal sector, we are talking about 26.5%. And that is average. If you look at the African pension markets, we're still having similar coverage ratios, apart from maybe a few countries that have slightly higher, but on average, we're talking about between 20 and 30% coverage for those who are contributing into pension funds. We do have also 1,200 registered pension schemes in Kenya currently, and we're looking at approximate 85 to 90% coverage funding ratio insofar as the contributions are concerned. But just to note that within the 2.181 trillion, 65% of that is from occupational schemes, 20% individual pension funds, umbrella 10%, and NSSF around 5%. That was as of December 2025, but we're seeing a trajectory now that with the incorporation of Public Service Superannuation Fund and also the growth of assets in NSSF, we are seeing the pie or the proportion of assets under the two institutions going up to around 40% as of end of this year. So technically, it means we're seeing a trend where there will be a structural transformation within the assets under management in Kenya, to the extent that NSSF and the PSSF of Kenya would be controlling more than 50% of the assets within the market. Just moving on, just to also provide a snapshot in terms of what is the regulatory landscape like in the Kenyan market. We are looking a bit more about enhanced governance within the regulatory landscape. There's a lot of scrutiny within the regulator in terms of how the trustees are carrying out their fiduciary responsibilities, and also ensuring that the trustees are competent enough to be able to discharge their mandates. And there are requirements for trustees to undergo specific trainings that are mandated by the Retirement Benefits Authority, and at the same time, they have to undergo continuous training assessments. We are also seeing evolution in terms of investment guidelines, a lot of debates around that as to whether the current guidelines we have within the regulatory landscape are representing the modern dynamics when it comes to the member choices and also when it comes to socio-economic development. So there's a bit of conversations, or a lot of conversations about diversification into alternative investments, and there's a lot of discussions on infrastructure, how pension funds can be able to support infrastructure and investments. And we've seen a lot of allocation towards that, especially from large schemes on infrastructure projects that the government is rolling out. As well, within the space of investment guidelines, we are seeing mandatory ESG integration coming in, and RBA, or Retirement Benefits Authority, a while back, that was last year, introduced a toolkit that the industry have to be able to comply with in terms of checking their metrics within which the ESG can be incorporated within their pension funds. So the investment environment is quite evolving within the Kenyan market space, and there are conversations also about reviewing the regulations that would be able to provide a future forward-looking kind of framework which will incorporate all these diversification needs of different pension funds. Of importance also is to appreciate that compliance and reporting is also coming quite stringent within the government framework and also from the regulatory framework. The regulators have been trying to enhance their on-site inspections and also automations in terms of RegTech to ensure that there's real-time reporting to the regulators, and that is also quite a lot of developments on that, as well as also the requirements to disclose on annual reports information that will be beneficial to the members. We are also seeing a lot of conversations around ensuring that the funds that are earmarked for the members are safeguarded, and there has been a lot of innovation or also developments in terms of disclosure to the members, complaint handling mechanisms, treating customers fairly regulations that are geared towards ensuring that the space within which the pension schemes are operating, the member choices comes first, and also members' benefits are protected. And globally, as you may also have noticed that most supervisors globally now are moving towards risk-based supervision. and more so outcomes-based supervision rather than the compliance that we are used to. It's also something that we are seeing coming heavy in the way the regulator in the Kenyan market is also conducting their supervision, where they are mapping risks that are inherent in different schemes and trying to look at the level at which a scheme has exposure on those risks. And the higher the risks, the more they are able to come closer to scrutinize more on the activities within the pension fund. And of course, by and large, we are seeing also evolving scenarios within market development. There are products that are being incubated within the Kenyan market relating to retirees. We are seeing a lot of introduction of income drawdown funds with the decumulation options. We are seeing post-retirement medical funds being innovated, and also some would relate to last expense covers, as well as also integration of affordable housing needs within the space of pension sector. We've not gotten to the level of where Singapore is, for example, where they've integrated healthcare, housing, emergency needs, as well as also things to do with medical within the context of the fund or the scheme. But I guess those are that we are ideally moving towards that direction. Some of the proposed changes that came through, just for your noting, would be that we had the enhancements of tax incentives for those who are contributing into the pension funds, and now access of benefits in retirement is tax-free, and I guess that was a welcome relief in terms of our members who are saving for retirement. There's a lot of conversations around data protection, and that has already been enacted, and therefore there's a lot of implementation and also scrutiny around data protection within pension funds. So as mentioned earlier, we'd also had enhancements on the investment guidelines to provide or to incorporate infrastructure and rates. That was one of the developments we were able to witness for the last 2 years. We are seeing also continuously the NSSF Act coming into full implementation in terms of the limits that each member or employer can contribute into NSSF, and we're in the fourth year at the moment. So I believe when it comes to the fifth year, we'll have full implementation of the NSSF Act, which requires that each member to contribute 6% and the employer to contribute 6% of their salaries up to the national average earnings wage. Initially, it was capped at Kenyan shillings 200 for employee and 200 shillings for the employer. So there's quite a lot of discussions as well in the long run. There are proposals that have come through within the Kenyan market of as late as 2 months ago. There were discussions about proposed changes. There are quite a number that the regulator is pursuing, and also trying to get the public to participate in those proposals. And we believe that the industry is headed to a better space in terms of ensuring that there's adaptability, and also ensuring that the schemes are member responsive in how they are conducting their mandates. Something to note also on digital transformation and technology. We over time, since 1997, when the Retirement Benefits Act was enacted in Kenya, we had seen quite a lot of manual ways and manual frameworks or processes of I would say, service delivery that would relate to member engagement, processing of benefits, as well as also communication. But increasingly, there is demand for digital transformation, and each pension fund which we have interacted with, they are putting in place strategies to ensure that their digital transformation agenda is speaking to the current member of today, and that will involve things to do with the digital member services. This would entail portals to the members, mobile apps, and of course ensuring that they can track their benefits on real-time basis, as well as also having benefits projection that are being projected. There's more also that is being done within the service provider's perspective, where they're introducing automations on their processes. We're seeing the trends on robotic processing automations. There's conversation around AI, and now AI can be able to power either chatbots or queries within the pension administration framework, and also to enhance payments and reporting within this framework of service delivery. But just to note as well would be that we are yet to get to maximize the data that we have within the sector to be able to drive insights that we believe can be able to enhance the member experience. And I think that is the phase at which most players are at the moment, trying to link the data that they have to their members' day-to-day, behavior or consumer behavior to be able to derive insights from that. Case in point, if you go to a pension fund like Aware Super in Australia, they do have what is called APIs that links between the member statement and the pension, the member statement in the pension scheme to the bank statement of the member. So those in itself, the two APIs are able to provide linkages to be able to provide insights and also advise the members on real-time basis. We are also seeing initial discussions around blockchain, ensuring that the records that we have can last for a longer period of time. And we believe that could be a good initiative if that is incorporated, as well as also things to do with cryptocurrency discussions or considerations. Of course, that will be informed by the regulatory framework, but in the nutshell of members' investments or member choices, that could be something that could be looked into. So within the ecosystem, we're seeing, in summary, the need for cloud infrastructure, where as a scheme, you must have, or a pension fund, you must have your own cloud infrastructure that is speaking to or feeding into the different service providers, and that also provides for business continuity. We are also increasing in the space of increasingly being aware in the space of cybersecurity, the risks that will come with automation and also innovation, as well as also as much as also to avoid or to mitigate cybersecurity risks. We are seeing the move towards biometrics, where schemes are picking up fingerprints or iris in the context that they would avoid paper trail or manual paperwork in terms of onboarding of members, and also certification for retirees. Open APIs, where all the service providers are able to be connected with an API, and all the data is within a central framework or a dashboard, would also be a thing that most of the schemes would be considering. And we are seeing the contracts for the different providers now providing for API-ready solutions, so that when the schemes are moving towards digital transformation, they're able to automatically connect with all the data that the providers have. I wouldn't want to mention more about the big data and AI. I believe that is quite a number of issues that we think it would be able to support in terms of ease of digital transformation. So when we talk about digital first scheme or pension fund, what do we mean? We believe that in the long run, pension funds should be able to have some KPIs or metrics that would enable them measure their maturity towards digital transformation. One of them would be to look at an adoption rate. If you have a member app within your scheme, or you have a member portal, then the assumption would be that 95% of your members should be able to use that. But then also the same should be able to reduce the number of queries or inquiries that are coming through to the secretariat or the administrator. Way back in the banking sector, we used to see long queues for people going to withdraw their money or going to get services within the banks. But when banks adopted mobile applications, we saw most of the banks reducing their branch networks and also reducing their staff who would be of service to these members, because the members could be members could serve themselves from the mobile application. So we are also looking at a scenario that if we are able to get to a situation where pension funds can actually have real-time contribution tracking and updates for their members, instant benefit statements on demand. They don't have to wait for the end of the year, and also interest distribution should be automated, so that it's on a frequent basis, even if it's on a quarterly basis. That would be a better approach to look at. But then also, when it goes to the back end of pension administration, and I would want to speak from a point of view where you could be in a situation of in-house administration, or you have outsourced your administration to a third-party provider. Within all the frameworks, it's possible that queries from the members could be handled by a chatbot rather than individual or persons who are behind the phones. Because once we automate all the issues within, once we deploy the robotic processing automation, it's possible that you could have AI chatbots that could respond to members within a shorter period of time. And we are likely to see savings of up to 50% in operational costs in the long run. And I believe that within that framework, if we are able to execute, then it's possible that even personalized engagements will be possible within the scheme, where the chatbots and AIs are able to analyze the member behavior and provide targeted communication, and also member education and engagement. The other bit also that is emerging is ESG and sustainable investing. Just to appreciate that globally, we have close to 30 trillion of assets that have been deployed or that have an exposure on ESG. And that is driven largely from the global north. That's countries within the US and the EU. There's a lot of conversation around sustainability and also ESG integration. And the regulators are moving towards enacting regulations that would enable either listed entities or pension funds to disclose the extent to which they are incorporating ESG within their investment strategies. And in Kenya, it is a good initiative around that. RBA has already introduced a toolkit on ESG integration, and that came in last year. So we are yet now to see schemes moving from now, awareness to now policy, where they are able to develop ESG policies within their schemes, but then most importantly also to incorporate their fund managers or the asset managers to be able to provide metrics, or to be able to have metrics within which they can be able to assess and measure the level of allocation within the ESG framework. But there are opportunities as well that pension funds can easily jump into. We are seeing green bonds being floated. We have affordable housing projects that schemes can be able to invest in, renewable energy, infrastructure, and also ESG related corporate equity. So we are seeing development within that space, and I believe that will also shape the discussions in the long run. Then our proposal, or our implementation framework proposal to pension funds, has largely been that they will need first to have awareness within their funds or their trustees on the importance of ESG. Then within that understanding, they're able to develop a policy, and then they now move to the next level of screening to the extent to which they have assets that are ESG aligned, as well as also to assess the risks that will come with that before moving into portfolio integration, where they now incorporate their fund managers on the respective opportunities and also the asset allocation frameworks that they do have. And of course, they continuously report. So we are positive that this will be something that in the long run will be able to provide some discussions or shape the discussions in the investment space, especially around impact investing. Something else to note is that we need to also appreciate that our members are consistently changing in terms of expectations, and also the demographics that we are dealing with requires different strategic engagements, right from baby boomers to Gen X, and now we are talking about Gen Z and millennials. They have different perceptions and biases towards investing, and also primarily towards retirement. So a strategic pension fund will be able to differentiate the different groups and provide different engagement strategies between the different groups, be it on a multi-channel service delivery model, or ensuring that their digital capabilities. For example, baby boomers, they just require personalized touch. They are not too tech savvy, so they may require traditional channels of communication. But a Gen Z, for example, may require instant digital first mobile centric platform. So strategic pension fund then will look at how then do we structure our technology to speak to the different categories of members, structure products as well, and also provide targeted financial education programs. We are used to pension funds doing vanilla communication or engagement across board, and sometimes they may not bring out the best value within the members that they have. We did a survey a while back about the expectations that members would want from their schemes. And within that survey, we noted that most members value one, transparency. They will want to appreciate how the scheme is performing, they get updates, and also they are able to be advised on the costs. But then also coming next is accessibility. They want to access their benefits on real-time basis. They do not want to know who, for example, they have to call, they have to reach out to. But within the framework of the platforms or the ecosystem, the infrastructure that the scheme should have should be able to provide instant mobile-friendly platforms that members can get access of their information. But then also to take cognizance of the fact that different members may have different appetites towards technology, and therefore providing different technology platform to suit the different needs may be also critical. The other bit that also came in, thirdly, was personalization. That whenever there's advice to the members, it should be so personalized, should be tailored, and it should be one that it could provide a specific solution to a member with regards to their own specific retirement needs. So it means then our through technology, we should be able to provide specific customized engagements to the members rather than looking at members as a whole, but each member as an individual who requires a personalized coaching experience with regards to engagement. The other bits were also on speed and education, requiring that they get instant responses and fast benefits processing, but then critically to also ensure that there's financial literacy or retirement planning tools that will help them engage as much within the pension fund. So someone would ask, so where are we in terms of investment trends? Where are pension funds investing? We've seen globally, of course, from the Kenyan market, we're seeing most of the investments in fixed income at close to 50%, then equities around 25 to 30%, less than 8% on alternatives, and most of it as well in real estate. But the feature that we are looking at is that when you look at the global benchmarks, the same allocation mix, you'd find that fixed income would be around 21% to 25%. Equities are similar at 20%. But then now you'll have alternatives at almost 21% and offshore as well at almost 21%. So it means at an average, you're looking at a global balance approach of 25, 25, 25. But in Kenya, we're still seeing a lot of skewedness towards fixed income. But they are also, of course, drives, or they are also pushed to have pension funds allocate more to either offshore or alternative investments. And that is actually an emerging issue that we are looking at. And some of these emerging opportunities are in green bonds, social impact bonds, private equity investments that are either moving to tech sector or agribusiness, as well as also infrastructure bonds. But then within the average returns for the last 5 years within the Kenyan market, we're seeing an average of around between corporate bonds, government bonds, and balance funds are an average of around 10 to 11%. Last year, we saw a rebound in the markets, and the average return was around 26%. And that also gives us a snapshot of the volatility that we do have within the Kenyan pension sector. But then most of these performance are driven by asset allocation strategies by the different pension funds. Also, the investment manager or the fund manager would actually influence the return substantially, and be it the choice that the trustees chose in terms of who the investment manager is, or the design with which they chose to be able to invest, be it on segregated or on guaranteed funds. There's also a bit of discussions around cost management as much as performance is concerned, and looking at what is the effective cost that we can generate a return for each and every asset class. So as part of the strategic initiatives that we are seeing, we're seeing also discussions on risk management of these investments, because we have to balance risk and return at any given point in time. But then also the governance within those investments. How sure are we that as we put funds into the different institutions or different frameworks, we are sure that as a fund, there's effective governance within those investments. I just want to also note that within the space of governance best practices, there is a lot of discourse on governance, especially on board composition. Just like any other, I would say, from an African context, we do have a representative model of member trustees who are elected, and also we have sponsored trustees who are nominated from the employer, and most of these trustees will come in to make a board, and this board then would be able to discharge their fiduciary responsibilities within the fund. But then, of course, we do a lot of governance audits and board evaluations, and we increasingly see the trends around diversity coming in, especially ensuring that all the representatives from the different interests are able to bring in the expertise that is required within the board. Increasingly, issues of gender mix is also coming in handy, especially where a board has a skewed gender mix, and also the age. Sometimes you have a younger population in the scheme, but you notice that the trustees are who are running the fund are perhaps more elderly, and therefore they are not a representative of the old membership within the scheme. So those are the issues that we're looking at. Increasingly, there is an emerging trend of including independent trustees within boards. We've seen in Kenya, out of, for example, maximum 9 board of trustees, you find 2 are independent, and that is an emerging trend that we are looking into going forward. The limits in terms of the term which the trustee could serve in Kenya, that was enhanced last year to 5 years. Initially, it was 3-year term, renewable once. So now it's 5 years, renewable once. So a trustee can serve up to 10 years, primarily to enhance succession planning, but then also to bring in the long-term view to, within which pension funds operate, especially when it comes to investments. As well, it's a requirement for the Kenyan pension funds to have a committee. One of the committees that is mandatory is administration and communication committees. But then within the framework of other committees, as the fund is growing, then you would have investment committee, audit and risk committee, as well as any other committee that the trustees may deem fit, but not more than a maximum of 4. The critical area around committees that we are observing going forward is the effectiveness of committees to be able to serve the main board. And we still are doing a lot of capacity building to support especially the boards that are incorporating committees to be able to entrench the actual, how do we, to be able to entrench amongst themselves performance management around committees, and how can committees be able to deliver for the board, because a cost center in itself, and therefore if it's a cost center, then it should be able to create also efficiency at the board level. But that also can only happen if there is a proper structure, there is a proper alignment, and also committee matrix within the board. The other bit also that is critical is the trustee competency, appreciating the fact that trustees come from different backgrounds, different experiences, and sometimes pension is a new language to them. And therefore, the certification programs comes in handy, and also the continuous professional developments. There is also a need for annual board evaluations, a requirement in the Kenyan market. Every year we do annual board evaluation, primarily done and also better done by a third-party provider. And these annual board evaluations are necessary so that it's able to bring out the strengths and also areas of improvement within the board dynamics. And that also can also spell out the contributions that each board member and also the contribution of the board as a whole to the performance of the scheme. The last bit around the governance best practice we're seeing is the requirements for disclosure on the annual reports that are going to the members on different specific provisions. We're seeing enhanced reporting framework, and also we're seeing quite a lot of requirements on transparency, especially on fees, conflicts of interest issues, and also performance within which the schemes are conducting their mandate. So I guess that is what would come in from a governance best practice perspective. I can see a hand from Maurice. Maurice, please feel free to interject. Um,
Jeff, kindly assist on unmuting Maurice.
Okay. Thank you, Godwin. I see you mentioned quite a bit about governance, which is very critical because of savings and savings, especially pensions, which is supposed to look after people after retirement, is also very, very critical for the balance on the economy. And of course, you mentioned that we will be looking at ESG also, which again just reinforces sustainability and ability to make sure that the funds are balanced. But of the 2.81 trillion, I'm sure NSSF is part of it. Whereas we are training in governance, how do we make sure that integrity is at the core of pension management? Integrity. Time immemorial, we've heard of poor decisions made by people who are chosen to lead funds like NSSF, and the saver who has to pay without on a compulsory basis has no choice. Eventually, if the fund is performing at 8% rather than at 15%, then the 7% loss is borne by that individual saver. How do we, as we talk about governance, as we talk about making sure everybody can save and be comfortable that he will receive the funds when he retires, how do we make sure integrity is at the center stage? And I know the unfortunate situation in developing countries. There is a lot of political interference. I am sure you are aware about the loss of the 17 billion Kenya shillings on the Cusco savings. I mean, again, savings, not necessarily pension, but almost similar. How do we make sure? And of course, eventually, some of these bonds that you're talking about, which are investment tools, are also government related. How do we make sure that these bonds will mature and will be paid so that the saver will get his pension when he retires? It's a very, very challenging situation. You saw what happened to the Saiton funds. The guy says, "Oh, can you please forgive me?" Yet he has made his company lose over, I think, 10 or so billion shillings of people who are saving or people who are investing. How do we make sure integrity is critical? And how do we make sure that even as we enhance governance, the political interference bit is lost. It's a big challenge, but I'm sure it's key to make us move forward with confidence because people do need to save for their retirement. Thank you.
Thank you, Maurice. Indeed, you've brought in a very key point, integrity. From a governance perspective, they normally say culture eats strategy. So integrity are part of those values that we would want, or any institution would want to espouse, and especially within the financial service space, because financial services sector is about trust. So and trust is more about perception. So ideally, if there is an push towards value-based culture within every organization, be it in Kenya or within Africa, I think we will be able to get to a better space, because we've seen competent people, we've seen competent leaders, competent boards still falling into the trap of mismanagement or misalignment with the core values, and one of the big integrity. And that's why you can cite such cases where now we've lost money. But I guess if as a nation or even as Africa, we have a value-based system that at bare minimum, if you look at countries that have succeeded, the likes of Singapore, these countries that we normally cite, they are very brutal when it comes to issues of values. And I guess until we get to that point as a country where values is entrenched in what we do on a day-to-day basis, then it could be possible that you could do so much in terms of governance, in terms of the structures, but within ourselves, we have not really self-evaluated ourselves. However, not to water down that issue for integrity, we've seen also governance at best in institutions where they have been able to define what is their structure is like within the confines of strategy, even looking at the board composition, but at the same time drilling down to the bare minimums. For the financial services space, we've seen also the regulators coming in to be able to entrench now, make it kind of compulsory. That's why you find, for example, within the retirement benefits space, trustees have to be certified. They have to be, they have to file returns to RBA, and also risk-based supervision will warrant that if trustees are not discharging their mandates, then there's also discontinuance of it. And once you are barred from being a trustee, then you are no longer able to serve in any other board. So we're seeing the regulator trying to put a little bit on that. Also, I think NSSF at some point enacted their regulations and they have enhanced it to be able to provide for a much more clarity in terms of the board. But I would say at the end of the day, we'll have to go back as to whether we are espousing values that are consistent with financial services ecosystem, especially even from a pension fund level. But I do believe that those are the challenges that are emerging within the different ecosystems. So I would just quickly move into the areas of operational efficiency. We've talked about automation. We are looking forward to a situation where in the long run, there would be operational excellence when it comes to payment of benefits. We have seen schemes paying even member benefits within 1 day. This one, I think the regulator provided for 21 days. Some are targeting 14. Some have even moved to 2 days. Some are doing even 1 day. So depending on how efficient you are as a scheme, then you would be able to assess to what point are you able to, or have you been able to expose the operational excellence that we're talking about. Some schemes will deliver statements on a quarterly basis. Some will be able to deliver within 1 month after the close of the audited accounts. And depending on the efficiency of your administrator, it is recommended that that should be within 30 days. So there are automation opportunities that would exist for schemes to be able to deliver, an efficient ecosystem within their frameworks. But just to note as well is that there are inherent risks that we see as emerging. One of them is cybersecurity risks and data privacy. These are concerned because the moment you have frameworks, as much as you deploy technology and you're not aware about the cybersecurity risks and also the data privacy obligation that is within the regulatory framework, then there's a possibility that it will jeopardize all what the scheme would be doing in terms of enhancing service delivery to the members. There's also the regulatory compliance. There's increasing need for compliance within the schemes. I note that RBA or the regulators have been releasing quite a number of regulations to schemes to comply, and therefore the trustees have to always cope up with all the new regulations. They have to cope up with the checklist in terms of their reporting, but then also they have to spend money to comply. And those are areas that we feel they're increasingly becoming a risk to most of the schemes. I don't want to underscore the investment volatility where there is uncertainty, where returns keep changing, and that could be also an area that could be looked at, as well as also longevity risk and also governance failures that may come within the scheme. But there are also collaboration opportunities that you can look at within the pension ecosystem. We believe that within the long run, if the schemes are if the schemes can collaborate together, then it's possible that we could be able to have better bargaining power, especially from the service providers. We could have shared experience as well, and then of course look at how do we accelerate innovation within the pension ecosystem, as well as also of course importantly reduce the costs. So key takeaways would be that some of the strategic imperatives for pension schemes is that we need to embrace digital transformation, we need to enhance governance, we need to diversify investments, we need to manage our risks, and also ensure that we are having ESG integration within our frameworks. We need to focus on the members and ensure transparency and, of course, innovate continuously. So I do not want to pick up most of the issues that you've talked about. See, these are some of the issues we've discussed in terms of concentration, risk on investments, ESG aspects, as well as also the issues of the trustees being enhanced. NSSF is coming in strongly in the pension ecosystem now, and trustees must be aware about how best they should be able to align their regulations and also their frameworks to incorporate NSSF as a protected rights benefits. And definitely, of course, as mentioned, there are new products in the market that we need to always upskill ourselves and also roll out to the members. So I want to end there for now and perhaps hand it over back to Gloria to be able to moderate the session. Thank you very much.
Thank you, CS Godwin, for your elaborate and quite high-level engagements and presentation. I believe we are all hooked, all members are hooked. We are looking forward to questions, more questions on the chat board, or maybe if there's a question, you can raise your hands. We take the questions. For the first session, while it seems there are no questions, then I think I take with the whole honesty that we are all in board, rather on board, and we are looking forward for further engagements. Um, so for the next presentation, we're having a poll being shared. For that, let's stay hooked for a small commercial break, just to take you through about the insurance agency for Finnet Insurance Agency, a place where we engaged on risk and solutions. We provide solutions to our employers, different aspects in terms of medical covers, assessment of the entire structure of the organization, dealing with the assets, protection, as well as also the other properties in terms of vehicles. We provide motor vehicle insurance and fleet management. We offer medical insurance for the staff, as well as also PRMS for the retirees. Um, We already have a well-negotiated program that really works well for retirees, and we're looking forward to engaging your teams or your colleagues for that particular line. So the poll is on. Allow me to welcome our colleague, Mr. David, to take us through for the next presentation. Even so, thank you so much, and stay hooked. Thank you.
Thank you so much. And good morning, everyone, again. My name is David Mtisia, and I'll be your presenter for today. I'm going to take you through the art of strategic planning. Allow me to share my screen. Can everyone see my screen? I hope everyone can see my screen. Yes, you can see the screen. Okay, we can just begin. So in terms of strategic planning, when it comes to strategy, what are the rank statistics in the market right now, and what happens on a day-to-day basis? One thing is that out of the strategic plans that have been created so far, 70% fail on the execution stage. What do I mean by this? Most of them fail because once they're done, they're done and dusted. They're normally not executed. They're actually put on the shelves, and there's no person accountable to actually deliver them. And that's one of the biggest challenges that you have with strategy. Number two, in terms of statistics, an underlying statistic is that actually 10% of actually strategic plans that have actually been achieved. And by achieved, what do I mean? These organizations that have successfully implemented, and this includes pension schemes. Out of the total strategic plans that have been people have set up, 10% of the ones that are actually completed. In terms of member buy-in, in terms of organization, in terms of the employees, for the pension scheme to come to the members of the pension scheme, 95% don't understand what the strategic plan is all about. And if you're looking at it, and another key thing that really is a critical factor is that over 80% of the leadership teams spend less than 1 hour in a month on strategy. What does that tell you? It tells you that in terms of overall success, it depends on the leadership teams. Do they actually take time to actually work on the strategy? Do they take time to actually implement it, execute it on a day-to-day basis? And this comes the big question. Between strategy and results lies the value of execution. And the art of execution is where we actually sit down and say, now, what do you need to execute? And that's what I want us to go into today. In terms of poor communication, in terms of why strategic plans fail, the first one is poor communication. We've done an analysis from patterns. We've seen that poor communication really drives is a critical factor in terms of success of strategic plan. What do we mean by poor communication? The management of the trustees create a strategic plan, yes, but they do not communicate with the service providers about the expectations. They do not communicate with the members, and they do not even communicate for the schemes of secretariats. They do not communicate secretariats. That becomes one of the biggest challenges: lack of accountability. In every strategic plan, there are what we call pillars. In those pillars, the activities that are meant to be done. In those activities to achieve the desired results in a strategic plan, you find that there is no one who's accountable. You might say the body is accountable, but no specific person is accountable to that particular aspect of that strategic plan. And that creates a challenge. And another key thing is the resources. If you look at resources, even on a daily migration perspective, wherever there's a plan, there's an action plan. There should be resources, be it financial, be it manpower. Most schemes and most of them do not actually create resources for execution. They assume that it will go on magically, and that never happens. And because of that, you find that out of all this, it becomes a challenge. And the fourth one is resistant to change. What do you mean by resistant to change? You do not, when it comes to a new strategic plan, when it comes to strategic plans, you find one thing. You need to communicate a strategic plan to the members. The members need to accept it. The members need to internalize it so that they can be able to know what are the key areas that they need to achieve. And when they actually internalize it, it's easier even for them to actually pursue it and facilitate it to the 100% completion. And when you look at all this, I've listed 10 here for the moment, looking at unclear priorities. Because if we don't set out targets, it becomes unclear because the members do not understand what the strategic plan is about. They are not clear about it anymore. And in terms of monitoring and evaluation, it brings another key thing. And leadership misalignment. You find that in terms of the core leadership is aligned, but the management team is not aligned. And because of that, it also creates a big challenge. And because of that, that's why strategic plans fail. Another key thing is competing initiatives. What do you mean? You can have two pillars, but all of them are competing against each other. We should have the pillars in the strategic plan should be actually complementing each other, not competing against each other. And looking at also insufficient skills and external shocks. In terms of the key gap, because we're looking at gaps, remember we talked about what are the key reasons why strategic plans fail. Now the question comes in, between strategic formulation is what we need to do. Execution answers the question how we do it. And that is where the gap lies, because we create plans, but we do not create an execution strategy. And this can come in the implementation matrix in the strategic plans. For example, there's a nature of work. Most trustees, being a trustee is a secondary appointment apart of the panel as employees. That means that they may need to appoint someone to actually run with the execution of the strategy, and that never happens. You find that you only meet once in a quarter. You expect that everything should have fully never communicate to the various service providers. You never connect to the secretariat, and that becomes an issue. Another thing is involvement, people involvement. As trustees or as leaders, do you involve your management? Do you involve your members in the strategic plan? Because each of them has a role to play. Because if we do not be able to figure out that role that they're playing, they will not be able to. And this comes back to communication. Did you communicate to them that this is the role they're going to play? And even looking at tasks and accountability, were you able to put accountable parties apart from you? In terms of abstract levels, we find some strategic plans are very abstract. And by abstract, what do I mean? You give, for example, to grow the fund base to 100 billion or increase member experience, but you're not specific on which particular experience you're actually trying to improve. And these are things that we need to be clear about, because clarity makes the strategy be able, it actually makes the how clearer. Because strategy execution is all about making the how clearer. There's what we call the skill set as well. When you're looking at skill set, what do you mean? If you're creating a strategy and you have employees and you have a secretariat, do they have the skill set to execute the strategy or not? Because if you don't have people who have the skill set, be it service providers or be it the actual secretariat, you will not be able to achieve because you do not have the necessary groundwork to be able to work on it. And this is why we say in strategy you need to be able to answer how do we do it, because the strategy is the what we need to do. The how is what needs to that gap we need to execute. In terms of a balanced scorecard framework, what do you mean? When you're looking at a strategic plan for a scheme or an organization, whichever or a circle, it has to have 4 sound key pillars. One touching on financial, and this looking at financial ratios, things like cost efficiency. If you are DB and you're underfunded, if the contribution levels are not coming up, things like that, you need to start looking at it, and that should be one of the key pillars because we're looking at sustainability. Remember, pension is for the long term, so we're looking at on a financial base. What are we doing so that our members ensure that they grow? Number 2, customer. Remember, in as much as financial is a key aspect, our members require some certain services and the experience that they get. For example, how they are treated when they come to us for queries, things like turnaround times, things like communication to members. Is your strategic plan aligned to that? Does it have that alignment in its pillar? Because remember, you can align financially, but you will not align to how you communicate and handle your member disputes or queries or complaints or concerns, or even the day-to-day running. You are not going to achieve the desired results. Internal processes. Out of that, remember, we have financial as a core pillar. This is what we want to achieve as trying to achieve the success. This is how we are meant to treat our members as we achieve that success. But internally, what processes have we put in place? Do you have policies in place? Do you have the team in place to ensure that, from a governance perspective, do you have committees in place to ensure they run with these particular areas in terms that need to be done? If it's internal secretariats, is the secretariat well empowered? Because you have to look at it from that perspective. Then there's a learning and growth. Remember, for a strategic plan, it's normally a 3 to 5 year plan. So the question comes in between year 3 to year 5, year 1 or to year 3 or to year 5. What are the learning curves? What are the learning opportunities that are there for the trustees, for the members, even for the staff? Because at the end of the day, we need to actually say, as we grow the scheme, also the members also grow. And because remember, if there's no innovation in terms of growth in learning for the actual secretariat and the members, the desired results will not be achieved. And because of that, we find that for a balanced scorecard, this is imperative that most strategic plans should have these 4 pillars: the financial pillar, the customer pillar, the internal process pillar, and the learning and growth, because all of them build to overall success of the scheme. In terms of the rules of execution, remember, we talked about lack of accountability and execution. When you're talking about strategies, a strategy has, for example, 4 pillars. And out of those 4 pillars, you find that a strategy each pillar has, for example, three to 5 priorities, things that need to be done. And out of those 3 to 5 priorities, we come down. Each of these priorities have individual action plans. When you're looking at one pillar, you find that it has like 5 to 10 or 15 sub-activities. And this means that on an overall perspective, you find that execution becomes a challenge, because you might find that you have over 56 sub-activities that you need to do to achieve the desired results, but you've not made it clear and simple. And that is why we normally say, when it comes to execution, the first thing is you need to keep it simple. If it's growing the fund value, what is the key objectives? A simple objective. What is the simplest objective to ensure that people understand I need to grow fund value? Is it through contributions, through investments? Then you move on to the next level to understand, okay, who is the role of what managing contributions and ensuring that contribution increase? If it's in terms of investment returns, how do you work with the fund manager to ensure that the investment returns increase? And that is what I mean by making it clear and simple. Then we need to understand the link between strategy and execution. As I've mentioned, the gap between strategy and results is execution bits. That execution bit means that we need to understand who's meant to do what and where and how. Is there enough resources? Have you put a budget to it? How do you monitor and evaluate the steps? Because it's very important that we sit down and start monitoring the steps. Apart from that, we look at how to manage change. Remember, a strategic plan is a new vision that you're envisioning for the scheme or for your members. You need to get the member buy-in by them accepting the new vision that you're giving for them, even for the secretariat. So they'll actually be positive about it and see how they can build upon it. There's coordinating the information flow between various aspects, then developing execution capabilities and skills, what I've talked about. We need to start thinking about the skills and capabilities in terms of our secretariats and our members to ensure that even our trustees in the committee levels, to ensure that they can be able to achieve the desired results. Then the other bit talks about execution support, the organizational support structure, and the leadership style as well really affects this. Then in terms of the execution discipline, we've been talking about execution because our key agenda here is to look at how do we execute our strategic plan to success. First of all, we need to get the people who do it, the right people in the right roles. Remember, if you have a role on member education or member communication or even IT, do you have an IT person involved in your scheme who's going to run with the IT aspect of it? If there's someone running with the administrative, but there's someone who's actually assigned to run with it. Because remember, if you do not get the right people to do the right jobs you'll not be able to achieve the desired results. And once you get the right people to achieve, who are going to be the people accountable to achieve the desired results, we move on to the next step. The next step is looking at what? Strategy process. Remember, we have the right people. Now it's a process. The process is what are they meant to do? For example, if it's a person handling member communication, how are they going to the member communication? Is it through quarterly newsletters? Is it through the AGMs? Is it due to the quarterly communication? Is it through the member communication? Is there a plan? Is there an actual plan to deliver that? If it's talking about investments, how do you monitor your investments? Is there a plan to actually review the investments on a quarterly basis? Because remember, if you have the right people and you don't advise them what to do, success will not come. They will do their own things and you'll have a mismatch of priorities. So it means that the people and the processes should actually align to it. Then the final step is operation processes. We have the strategy, yes. We have the people. We have the strategy on how it's meant to be implemented. The operationalization of it, what do you mean? Now the people doing it, how do we monitor them? If you are meant to send a newsletter by Q1, are the newsletters going? If you are meant to ensure that member queries are actually resolved at a first level, is it happening? Because at the end of the day, if you look at the people, the strategy, and the process, all these things are the key things that break down when it comes to setting up a clear strategy for schemes. Now, the next aspect is looking at the execution framework from a different perspective. First of all, we talked about clarity. And this is very important. We need to have clear visions. If you look at some visions are not clear, some visions are not clear, some vision statements are not clear. We need to have things that are very clear, number one. Number two, how they're translated. How do you translate the strategy that is clear to an action point? Then from that action point, this is where the implementation matrix comes in, and the allocation of people and resources and operations. Then the execution of it. Remember, when you're talking about execution, you're talking about how do you monitor it? Because monitoring and evaluation, you find like most schemes have strategic plans, but they don't have strategic plan champions who report on a strategic plan on a quarterly basis. And that is a gap that creates the execution level makes a challenge. And from that, you look at on the monitoring and evaluation, what are the misses, what are the hits, what are the successes, what are the failures, and how do we learn from them, and how do we grow from them? In terms of strategy translation, it's very important that you understand, for example, this is trying to give a good example at what we are saying. For example, we're talking about to enhance member communication. What do you mean? Have we put strategy like creating digital programs? Have we put like newsletters, annual forms, financial literacy? If these are the key programs, what will be the key action points? Are we looking at forums, creating forums where they can have those financial literacy forums? Are we looking at newsletters? Are we looking at educational? And if you look at the project priorities, we actually set them and we actually put targets, like three programs per month. If it's educational content, four per month. If it's newsletters, 2 per month. If it's website design, within the 6 months. And you see, once you put action item that actually can be covered, we now go to the ownership. Who is responsible for this? Is it the board of the sponsors, board members of the sponsors? Out of that, do you have project managers? Do you have staff? Do you have consultants who are in charge of this? Because we need to answer the who. Once you answer who's doing it, then you come to the execution where you start monitoring it. And this actually shows clearly how a strategic plan should look like for every period in terms of from the objective to the actual daily execution. Then looking at the accountability framework. Accountability framework is very important because we realize that most schemes do not have someone who's accountable in terms of when they set the strategies. And how do you use what you call the RASI matrix? The RASI matrix has two aspects. The first aspect is looking at, for example, who is responsible, number one. Who is responsible to do the work? Number two is accountable. Accountable is the person who's actually the final decision maker. And who's consulted? Consulted are people who their opinions are sought and who should be informed and kept up to date with what is happening. For example, let me give a good example. For example, looking at setting up target and matrices. This is looking at, for example, setting targets for the strategic plan. The board is accountable. Who's responsible? The CFO. What do you mean by the CFO? It can be the financial part. Most schemes in terms of have what you call the CFOs, the accountant, the head of finance. They have them. The CEO can be the trust secretary as well. Then there is what you call the investment committee. The investment committee can be the person who's consulted, and the fund manager is the person who's informed. Remember, the fund manager is a service provider. This gives a clearer picture of in terms of driving the returns and setting the target. It's a work of the board to be accountable, and the work of the trust secretary or the CEO of the fund to actually set it up. In terms of developing the IPS, a good thing. Who is responsible? Who's accountable? The board. The board needs to, the ones who are meant to actually ensure it's set. Who's consulted? The CEO and the CFO. Why? Because they're looking at the needs of the organization from a financial perspective. Who is responsible? The investment committee. The investment committee is responsible because they're the ones who are meant to run with it. So they're the ones to ensure that the scheme has a investment policy statement and they take it to the board for approval. And the fund manager is consulted just to look at what are the key issues that they have concerns about. Portfolio rebalancing and other aspects. When you look at this one, it just shows you an example of how to ensure that the responsible party is accounted for. Looking at quota reporting, for example, the board is informed. Who is responsible? The CEO, the trust secretary. They're meant to ensure that this is actually done, and also the CFO, they ensure that it's done. When looking at who are consulted, they're consulted in terms of giving a report and the output of what has happened. In terms of change management, remember, when you're talking about strategy, we're talking about two things. We're talking about, first of all, getting the buy-in from the people. Because remember, a strategy is a vision and a plan, a new plan that the employees, for example, or the members don't understand. And because of that, it's very important that, first of all, we need to create a climate of change where we inform them that this is what you are wanting to do. We want to grow your fund to the next level. And it's actually built, and this is where things like member surveys come into place. If you can do a member survey in this process of trying to build change, trying to see what are the key things that the gaps they have. Once we build that and trying to see how, it means they'll be more restrictive because they feel like our needs have actually been taken into account. Then the next step comes in terms of now engaging the enablers. When it comes to strategic plan, you have to do a workshop where your secretariat, it needs to be involved in the process, because this is where we actually remove all the, in terms of engaging them, tell them this is what happened, this is what we need to achieve, is we're looking at, these are the objectives of the plans. Then out of that, it comes the implementation stage where now you come and now say, now this is who needs to do what, and this is where they need to go out. Remember, when looking at the 8-step process, we're looking at 3 things. We're looking at, the first thing is building buy-in from the members so they can be able to accept and be part of the change. The second bit is engaging the relevant stakeholders who are going to actually, and who are the responsible parties who are going to be doing the change. And the third step is creating a monitoring and evaluation framework to ensure that there's a culture shift and there's a growth to the next level. In terms of monitoring and evaluation, which is very key, we need to have weekly monitoring aspects. We need to have monthly, quarterly, and annual. And this is where we have strategy dashboards. From a board level, you need to have strategy dashboards that actually monitor strategy. You need to have balanced scorecards. And in those balance scorecards, you also have to have a risk matrix that also looks at traffic light reporting. Red are things that have not yet been implemented. Yellow are things that are in the process of, but they're not completed. Green are the ones that are completed. And this one will actually help in monitoring and evaluation. Because once you have a dashboard, you can be able to see where is the lag. And this is where now the trust secretary, the risk officer can actually come in and actually pick it up and see where they need to pick it up. In terms of the role of leadership needs to lead. And they lead by, first of all, clarity, also allocating resources and talents, and also building the culture and monitoring evaluation. And this goes back to the role of trustees. Trustees to ensure accountability and looking at strategic oversight, which still goes back again to their key roles: strategic oversight, accountability, resource allocation, risk monitoring, and champion change, creating a champion. So when you look at this, what you're saying is this: the success of the strategy is all dependent on the success of leadership following up on it. If the leaders do not follow up on it from the trustee levels or the CEO levels, then it becomes a challenge and they're not able to succeed. In terms of communications, it's very important, as you talked about communication, and this is where we are talking about stakeholder communication. Remember, in change management, we have to build it and say, where are we? What are we doing? Where have we reached? And this communication needs to start from the top level. The command needs to go to the board of trustees, then that goes to the management who track the process. What communication structures have been put in place to the members, to the staff, to the regulator, because at the end of the day, all these are parties who need to be communicated on the strategy and the process. So you need to see how do you communicate them effectively to ensure that we actually ensure, and periodically, is it quarterly, is it monthly, is it weekly, is it annually? So it's very important that we sit down to understand that communication is a key part of ensuring the success of the strategy. Another key thing is we need to look at quick wins. When you're creating strategy, we need to understand what are the quick wins. Remember, quick wins are things that, for example, these are things that you can easily do. For example, if it's things like, for example, in terms of launching our WhatsApp member channel, or doing a member survey, or updating our website in terms of we actually have a strategy and this is what you're planning to do. In terms of looking at priority 1, saying, have we done it? If it's trustee training required, if it's publishing quarterly newsletters. Remember, when you're saying quick wins, you're looking at, if you look at your strategy, What are the things that you are assured you can close within the first 90 days? What are the things that you can ensure you can close in the first 60 days? What are the things that you can ensure you can close in the first 30 days? When you actually set it out in that manner and looking at the key quick wins, you'll be able to see that you'll actually make faster progress. And these quick wins, you can because these quick wins fall under the actual information matrix that you're going to track your strategy. So what does that tell you? You need to track it from a quarterly basis, a monthly basis, and even on a daily basis. And this comes in the monitoring and evaluation aspect of it. So what are your quick wins for the first 30 days of implementing strategy? What are in the first 60 days? What are your quick wins in the first 90 days? This, remember, if you start with the quick wins, they're going to give you momentum to close on the other aspects of the strategy that you feel that are lagging behind. And in terms of common, and I've talked about this, just looking at culture and operations and strategy and structure. So it's very important that we implement in terms of trying to see our strategy and structure, they need to align in terms of organizations. And in terms of our culture and operational system and running, they actually need to align. It should not have things like poor communication, resistance to change, that change management solves that, external dependency. Sometimes we need to create internal resources either through the board committees or through a secretariat to ensure that we can be able to actually run and board management from the disconnect and learning culture as well. It's very important that we see that we avoid these pitfalls. And in terms of success factors, the key things to a successful strategic plan being delivered is, first of all, leadership commitment. If the leadership are committed and actually running with it 100%, you'll actually achieve it. Accountability, number 2. There should be accountability in terms of who's handling what and what are they covering. Resources, number 3. Number 4, effective communication. Number 5, monitoring and evaluation. Number 6, change management. If you actually cover these 7 key areas, if you look at for the schemes of strategic plans and organizations, do you have these key 7 areas factored, success factors? What is their score? It's called, when you look at strategic plan, do you have clear accountability? Do you have adequate resources? Is there effective communication? Is there robust monitoring? And how do you manage it? Then, as I talked about in terms of execution, you need to understand one thing. The immediate ones are the quick wins in the first 30 days. Then there's short-term ones that you need to 90 days. Then there's a medium term, which is 6 months to 12 months. And then there's the long-term ones. So in a strategic plan, it's very important to have immediate goals that the next 30 days, this objective will be delivered. Short-term, what are the short-term goals? What are the medium-term goals, long-term goals? Once you align all that, you'll be able to achieve the desired results. Then in terms of, you need to be simple and clear. Number 2, you need to translate specific actions. Number 3, we need to look at accountability, adequate resources. All I'll say is this: strategy without execution is an isolation. Thomas Edison said this, and actually, it's a reality. Number 2, there's what we call Raleigh Bodson said: execution is a great and addressed issue in the business today. If you can able to resolve execution, I can assure you will be able to resolve a lot of challenges. Then, when looking at strategy, there's 3 things that I would like us to ask ourselves today. When looking at these are things that we need to ask ourselves. We talked about execution, but we need to ask ourselves, right now, for us individual members who joined this particular webinar today, what specifically represented from executing a strategy, number 1? These are the 3 things that you need to start asking yourselves. What are the 10 execution killers that are affecting your particular organization right now? Do you have a clear and single point of accountability in your plans? How effective and timely is our current monitoring and evaluation system? What are the quick wins that you have? Have you looked at the quick wins? And how can you improve board collaboration? Apart from that, which critical resources are there? Have you aligned to that particular strategic plan? And finally, how well is your communication? If you look at these questions that I've asked you right now, they are covering the key areas that are actually the core causes of your strategic plans not 100% being effectively identified and executed. So we need to start asking ourselves these critical questions, because at the end of the day, this is what is going to determine whether our strategic plan is going to succeed or not. Then in terms of that, in conclusion, what are we saying? We're saying, number 1, our strategic plan should have clarity, number 1. They should have accountability, number 2. They should have resources aligned to it, number 3. Number 4, we should have monitoring that is critically happening. Communication, number 6, should actually be happening very well. They should also be learning, continuous learning. Because remember, if it's a 5-year plan or 3-year plan, you should be learning on a year-on-year basis. So what are the learning parts? What are the pitfalls that you've changed and learned? And the critical one is persistence. You try until it fails, or you change strategy. So if you put for example, a strategic plan, you have pillars and you have objectives and activities. If one activity fails, you need to see how best can you be able to change that activity to be able to make the objective be achieved. And this is where persistence comes on board. If it's the issue of funding, it's the budget, what is the key issue that is stopping you from being able to achieve it? So thank you for so much. And what I will say is the difference between successful and successful pension schemes is not better strategy, but it's better execution. If we do not execute, you won't achieve the desired results. And this applies to organizations and this also applies to pension schemes. Thank you so much. Over to you, Gloria.
Thank you so much, David, for that enlightening presentation. If there's any question, feel free to raise your hand or you can drop it at the chat box. Any concern, any comment? As David has said, let's learn how to close the gap. As he said, it's one thing to strategize and another one to execute. I hope the presentation, we've gotten some highlights from the presentation that will be able to take it back to our pension schemes. If there's no question or comment, we will share an analysis form. Kindly help us fill it so that we get feedback on how the session has been, and kindly follow us on all our social media platforms to get to learn what we do and all the services and products that we offer at Finnet Trust. I'll welcome my colleague Sam to just say a word.
Thank you, team, for your engagements, and we are really hooked. Strategically, I believe as we part, we already know the kind of knowledge we are going to carry with us and share with our colleagues, our team for engagements, as well as also even implement on individual basis. Um, Please do subscribe on our YouTube channels. We have Finet YouTube channels. We have our social medias handles. That is the X Space and also LinkedIn. Talk good of us outside. Talk good of us in the market. We appreciate referrals. We appreciate your business to Finet, and we believe that we are going to continue work together with you to implement by creating a better tomorrow today. At Finet Insurance Agency, feel free to reach out to us through online or through our call centers, as well as you can also drop us a chat on in any kind of social media handles. Ask any questions. We are free to assist and to offer free services on matters to do profiling, risk management and advisory services, and also end-to-end claims presentation. For your personal, also even for your corporate line, feel free to engage us for such kind of discussions. Otherwise, thank you so much. Gloria, back to you for the upcoming events. Thank you.
Thank you so much, Nondo, for that. So as we plan to log off, kindly note we'll share the presentations with the emails that you logged in with. As well, we have upcoming programs, both locally and international programs. So we hope to see you in some of them. The major one, we have a conference coming up in May. It's our 5th annual pension governance conference from 18th to the 22nd of May in Mombasa. And for those who are able to join us for our global trainings, we do have one coming up in Denmark. That's from 18th to the 24th of April. Then in May, we have one in Switzerland from 23rd to the 29th of May. You'll be able, once you follow us on our socials, you'll be able to get all the details on our upcoming programs. Thank you so much for taking your time to join us. Once again, we appreciate your time and we'll appreciate to get your feedback as well. It's already shared. You can see it on your screen. Kindly take time to fill it so that we know where we'll improve on other upcoming webinars. Thank you once again, and we appreciate your presence. Kindly let us fill the need assessment form before we log off. It won't take much of your time, just a minute or 2 minutes of your time. We'll appreciate it as well. And don't forget to follow us as well. And you're welcome to our offices in case of any other questions or clarifications. Feel free to interact with us. We are open to any other engagements. So as we log off, I'll take it back to Sam to just close with a word of prayer as we insist on you filling the need assessment form. Thank you.
Right, let's pray. We thank you, God, for your love and care. Thank you for answering our prayers. Thank you for our successful engagements and interaction that we've had. We pray that to be with all our participants, our stakeholders in different engagements of their day-to-day activities, and also, Father, as they'll be going back to their residential places. May you go back with them, and also with the blessings that they've gathered through the day, Father, may also be used in the right way. We pray that remember the entire nation and also our success in different engagements of our business. We pray, believing, trusting the mighty name of our Lord Jesus Christ and Savior. Thank you. One last rally call, please. They need assessments. Feel free to reach us by sharing your name, your contact, platform. If you want us to reach to you via email or a phone call, feel free to drop that. Otherwise, thank you. And it might take a minute. Then from there off, we are free to drop off the call. Thank you so much.